Well, Matt Comyn, look, thank you for joining us. First up, what was the general gist of today's announcement that you provided today?
It was really a broader technology and innovation update. We also wanted to talk about some of the things that we've seen in terms of the way our customers are interacting with us during the COVID process. We also announced 2 investments in VC or venture capital funds as part of a broader effort to make sure we're the leading technology financial institution in Australia.
Yeah, what impact will the backing of CBA have for Square, Peg and Zeta?
Well, hopefully working together with both of them, we're going to find, source and scale more successful Australian fintechs. Paul Bassett, very well known in the Australian context and investor in some very successful companies, and Ash is an Australian living in the US, which is very focused on AI, and we want to work closely with them to try and find businesses that we can work with and hopefully we can offer to our CBA customers and help to develop some more success stories in the technology scene in Australia.
One of the ventures you've announced today is Backer. Is that a case of CBA trying to catch up to its competitors in the business banking space, or is this, what is it exactly?
Well, the business banking segment is very important to us strategically, but also really important to Australia's future economic prospects. And clearly many small businesses are under a lot of pressure at the moment. Backer is a simple solution to help more businesses get started, to get online. Obviously, we're financially supporting it. We've also put an incentive in place to help small businesses get started and on their feet. And we just recognise it's a very tough time for small businesses, and we want to make sure that we're doing our bit to support as many businesses as we can.
In the last few years, banks have been simplifying their balance sheets. They've been going back to basics with their investments. Why is CBA now trying to branch back out into that whole innovation space at quite a risky time, really?
Well, we made some deliberate choices about what businesses we did and didn't want to be in, and clearly we've exited some of those wealth businesses. But in our core banking business, which is very much part of our history, and I think where we can really help our customers, we want to be the leading technology institution. We want to be known for our customers as being the most innovative and bringing a lot of value to the way that they run their financial lives.
Last week, the Treasurer provided an economic update. We heard about potential budget deficit being $185 billion. Are you concerned about Australia's AAA credit rating?
No, I think the Treasurer went through the feedback from the ratings agencies, and that's consistent with what we've seen. I don't think the credit rating's under threat. Clearly, the size of the deficit wasn't a surprise to us, but the numbers have reversed as they've needed to. I mean, the government's needed to really step in and provide very substantial fiscal stimulus to the benefit of the broader Australian economy and community at this time, and that's exactly what they've done.
Yeah, the fiscal stimulus, they've said, is about $289 billion. How much more can the government really spend in this space?
Well, I think they've led with some very substantial support, and we've seen that, and we'll talk more about that at our full year results, and particularly into the period in September. If you look at the combination of the initiatives that they've put in place, and we've seen that flowing through. About 25% of that flows through our accounts to both consumers and to businesses, and they've extended that support for March next year, although reducing it appropriately over time. So I don't think there's any question that they've put, on a global basis as well, very significant stimulus into the Australian economy.
And it doesn't really look like Melbourne's infection rate has peaked yet. Are you concerned about the impact of Victoria on Australia's economy?
Yeah, of course. I mean, we're watching it very closely. It's an important component more broadly, about 20% or so of the Australian economy. And yes, we've continued to see the number of cases rise. There hasn't been a rapid escalation, but we're watching it very carefully, as I'm sure most Australians are. And clearly it's a setback, but we're hopeful, as I'm sure everyone is, that it gets under control quickly. And New South Wales still is maintaining a very low level of infection rate, but it also just shows how quickly the situation can change and how we all need to be extra vigilant.
A report released last week by Financial Counselling Australia ranked CBA last amongst the big 4 banks for its hardship responses to customers. Why did you rate last? How do you improve your record with financial hardship?
Yeah, we work really closely with Financial Counsellors Association and Fiona Guthrie, who's the CEO. So we were disappointed with our performance in that particular scorecard. We'd also been at number 1 previously, so we were disappointed to see ourselves step back. Some time ago, we got across exactly why. What was some of the feedback from financial counsellors? So I'm confident we've addressed that, and we're going to continue to make sure that we're delivering the best possible experience to our customers.
Matt Comyn, thank you for joining us.
Pleasure.